Hello and welcome back to another one of my videos, and today I'm going to be teaching you the secrets behind ICT's optimal trade entry. So guys, if you have heard of ICT, you have most definitely heard of the optimal trade entry, and I'm going to be showing you how exactly it works. Okay, so the idea behind the optimal trade entry is that you draw up a Fibonacci like so, and you wait for price to come to them Fibonacci levels and trade off of it. Okay, so price comes to these Fibonacci levels, you buy and then hope price will go up. But there's a lot more secrets behind the Fibonacci trading, the optimal trade entry. And you hear ICT talk about these secrets, but he never tells you what they are. He does, but he doesn't clearly specify what makes it tick. And that's what I'm going to do in this video. Okay, so basically you want to install your indicators, add your indicators. So this is the imbalance indicator. Just go on the indicator section on TradingView and type in imbalance, and it's the first one. And then you also want to add the ICT kill zone boxes, and this is the first one as well. Okay, so now we have these indicators installed. I know he doesn't like indicators, but they are helpful. No matter what anyone thinks, they are helpful. It's the way I trade, so do as you please. If you'd rather not, then draw them out manually. Okay, so as you can see, price pushed up, came back to this Fibonacci level and then pushed back up, and voila, you won. Okay? Now, this doesn't always work because, okay, look, for example, this one. Another push up, but what happened? Price took it out. Price came down, took out the red. So why did this one work, but this one didn't? That's the question I was asking myself constantly when trying to do the optimal trade entry concept, the smart money concept, but I couldn't figure it out, and then I did, and now I'm going to share it with you guys. So the idea behind the optimal trade entry isn't the Fibonacci, it is actually order blocks and imbalance. Okay, I'm going to show you a clear understanding of how to grasp the concept of this through the use of imbalance. So you see the same trade, okay? You're in time like here, and you think, right, I see this big strong push up, price broke structure, like so, got a huge break of structure, and price is going to come back down. Okay, cool. So I'm going to draw my Fibonacci. Sweet, price has come to that level. I'm now going to enter. And my first target, always remember partials, guys. Always use partials, otherwise you will lose. Okay, first target is going to be the 0 mark. Cool, this trade I won. But I don't know why. Of course I know why. So the reason behind it is, as you can see, and I'm sure you've probably already guessed by now, is these imbalance candles. Okay? So if you draw up these imbalance candles, like so, you can tell where price is going to reject inside the ICT kill zone. So again, the reason why this works isn't because of the Fibonacci, it's because of the imbalance and order blocks. So price comes down to these imbalance levels and rejects it and starts going up. Okay? Now we can use this information to our advantage. So I'm currently on the 15-minute chart. If I went on the 5, go back in time, sorry about this. I can then get a much clearer understanding as to why this trade done what it done. So I have an imbalance level here, and an imbalance level right here. Okay? So I can kind of see this one and see this one. So these imbalance levels line up with the Fibonacci levels. So I could probably narrow this down to the 0.705 level to get a much tighter entry. As you can see, it went from 1.63R to a 2.38R trade, guys. You see how this works, okay? All from including these imbalances. Because I know this price has been left open. This price needs to come back down to it. So I picked the closest one to it. Obviously, this is in hindsight, but the same concept applies when live trading, okay? So let me delete all of this and let's find another trade. So as we can see, go back to the 15-minute chart, sorry. So that would have been the one trade we took that day. And then price came up, hit the take profit, and we would have won that day. Great. We can then move on to the next day because there wasn't an opportunity here. There was no big black candles. There's no imbalance candles. So what do we see here? On this day, in the morning, you will see price trending down, and the only significant imbalance push we can see is right here. Okay? Now price comes to it but it's not inside of any of the kill zones, so we ignore it and we just narrow down the imbalance level like so. Okay? Now we're going to keep hold of this imbalance for future reference. So we're not going to use it this day because, well, it wasn't touched, was it? So we can keep this, and this will be revisited. Come on, guys, I can't make this up. So yeah, as you can see, price came back down to it on the next day. So this morning, we would have saw this consolidation over the night, and the only significant imbalance was here from the prior day. Okay, you also see huge liquidity up here, massive buy side liquidity because of these equal levels. Okay, and what happened? So in the morning, price came shooting down to this level where we could have entered at about 50%. And set the stop loss at the low of the imbalance. It's 4.8 pip stop loss. Target would have been this high, but then you also could have been wary of this imbalance right here, because you know that imbalances are reversal points. So price could have reversed at this level, so you would have taken a large sum of your money off at this point, which is still 6 Rs. Okay, 6 R trade, guys. Can't really go wrong. Okay, and also, what happens? Price comes to this imbalance level. Okay, in line with the Fibonacci. Oh, optimal trade entry. No, it's not. Okay, it's the imbalance. Imbalance and order blocks, but really the 2-in-1 essentially. If you see an imbalance, you're most likely going to have an order block in the same area, which is why I just focus on the imbalance levels, okay? Because they're much clearer to me. So again, enter 50%, stop loss. Would have done it at the high of the imbalance, and you would have got stopped out. So as it was so close, 2.3 pips, probably shouldn't have done that. Stop loss 5.3 pips away. Target would have been the low. And what happens? Price smashes through take profit. So this is 1 day's worth of trading, guys. 6 pips, 5.9 pips, no, sorry, 6R, 5.49R. Big win that day, okay? Huge win. Now, go on to the next day. What do we see? We see huge imbalance level here. Draw it out, narrow it down. And what do we also see? Huge imbalance level here. Okay? Remember, what time do you have to enter? In the ICT kill zone. So you enter at 50% of this level. Stop loss at the top. Target could have been here. These equal lows. Quick small target 1.52%, or target even lower, 2.98, and it just kept going, guys. Okay. Now, why didn't I take this trade? Because it isn't inside the ICT kill zones. Okay. I hold all credit to ICT for this. He taught me a lot, but I'm just showing you an easier understanding of the way he explains things. Okay. Just trying to make it easier for you guys. Now, what happens here? Got imbalance. Price has gone outside the ICT kill zone, so I wouldn't have entered that trade. It also didn't come up to the 50% mark. So yeah, that is a trade I would have avoided. It's quite a large imbalance in the area, so I probably would have held that out for the next day. As you can see, price has come to it and dropped down. Now, what do we see here? The only huge imbalance area is right here. Okay, price has to return to imbalance. That's the way it works. Okay, so no doubt about it. So I expand the area out, and what does price do? Comes straight to the imbalance. Set stop loss here, 8.3 pip stop loss, target the high, 3.43. Our trade, guys, okay? You can't make this up. As you can see, there was no opportunities here. There's a tiny amount of imbalance, and the price came straight back from it, but that's too small. You see, these small imbalances, they don't work. You have to have a significant break of structure. This is, this is kind of messing around. But this is a huge break. You see this high here? I'll draw it out for you. Huge break of structure, you see? Bang. And what happens? Price messes about, tricks some people, pulls back down, gives a Judas swing, another ICT concept, where price is pushed up, pulled back down, to then rise back up again. As you can see, price go down all the way up to here, 10-hour trade. Okay, you wouldn't have held it for this long, but it's still a 10-hour trade. You still could have closed partials and just left it running. Okay, just always take partials and set that break even, and just constantly do that, and you will be fine. You can be a profitable trader. Now, this day, what do we see? See an imbalance here. Imbalance here, what was taken outside of the ICT kill zone. Imbalance here, taken outside the ICT kill zone. So this day, there was an imbalance, and this would have been a losing day. There's nothing wrong with it. I would have lost 1%, whatever I risked. Just like that. Whatever, it's a loss. It doesn't matter. But if you look at all of these wins, that one loss doesn't compare. Okay? So what have we got here? So this was also a win. Let me just add these on. and then I can tally up the results. This would have been another trade I would have taken. So probably entered at 50%. Stop loss. Target. Okay. So out of 1, 2, 3, 4, 5, 6 days. Okay? That's 6 days, guys. We traded for 5 of them. It would have been 157. So let me just do the calculations. So 157, 6, 5.49, 2.98, 343, and -1 because of the loss. Okay, guys? So as you can see, 18.47 hours. Divide that by 2 because you're going to be taking partials, and that's probably about half. So about 9%, 923% in 1 week. Okay? So it's all about, remember, it's all about taking them nice trades and easy trades that are really obvious. Okay? You see a huge imbalance, that's super obvious. Don't worry about the tiny moves. Okay? Don't bother going down to the minute chart to find, oh, there's a tiny imbalance here and there and everywhere. But no, don't worry about them ones. Go on the 15-minute chart, find the huge imbalance that you see, the most obviously painful ones that the banks want you to see. Okay? They want you to make money. Okay, that's not true. But you know what I mean. They leave these obvious moves that price has to go back to. So the banks can sweep everyone's stop loss to then take it higher and reverse it. Okay? So remember, draw out your imbalance, find where price comes to it, enter at 50%, target the last high. That's all you have to do every day. And you can make about 5% a week. Okay? Remember that, guys. And if you enjoyed this video, then please hit like and subscribe to follow more of my future content. Sweet. Thank you and peace.